Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session of Indian Economy Essentials. And in today's session, let's have a discussion regarding Indore's Municipal Green Bonds. Now some of you might be thinking, sir, why are you discussing an article related to Indore? UPSC doesn't ask state-specific questions. Why are you discussing related to an article associated with one of the municipal bodies? Reason is very simple. Indore very recently has issued municipal bonds. Point one. And these are not just any municipal bonds. These are green municipal bonds. And these were listed in the National Stock Exchange. The first ever the green bond issued by a municipality has been listed in the National Stock Exchange. And that's a precise reason this article becomes very, very important. Apart from this, there are certain specific features of these bonds which are issued by Indore municipality which you'll understand in some time. Now first and foremost, what is the basic idea of a municipality bond? Simple. A municipality will issue a bond and borrow money. Either you call it as a debenture or a bond, basically the concept remains same. The issuer will issue and borrow money from the market. It could be you, it could be me, it could be anybody. And after the maturity period is over, right, the amount is repaid and annually certain interest or coupon is paid. And that's a precise reason whenever you come across the term bond, we'll simply say these are debt instruments. That's a point number one. Second point, it's not just any bond, it's a green bond. What do you mean by green bond? In the last couple of years, there has been a lot of discussion regarding the concept of green bond. And very recently, even Government of India has issued sovereign green bonds. Now, basic idea for green bond is simple. Any issuer will issue these bonds and money that is collected, I repeat, the money that is collected will be utilized for specific purposes which are environment friendly projects only. That's a precise reason the color is important. That is, in the name itself, green color is used. That is the basic concept of a green bond. Third point, one of the reasons why this Indore municipalities or Indore municipalities green bonds has become very famous is, for the first time, they have gone for a public issue. Remember this also, for the first time ever, they have gone for a public issue. Now, what do you mean by public issue? Imagine here is an issuer. Either they want to issue equity or they want to issue, let's say, debt instrument. There are generally different ways through which they can do it. One, they can go to the public. Public means where retail investors will purchase or will invest in these instruments. They can go to the public and issue the instruments, collect the money. Or they can go to specific limited number of investors, a group of investors, issue those instruments to them, collect money from them. And that is referred to as private placement. Remember this particular term, private placement. And within the concept of private placement, again, there is a concept of qualified institutional placement, right, etc. Don't worry. So the argument is simple. Either you go to retail investors, right, that is amongst all the other investors, retail investors are there, issue the instruments to them and collect the money, which is called as a public issue. Or else you can go to limited number of investors, generally up to 50, and issue these instruments to them, which is called as a private placement. I'm discussing this for a very simple reason. So far, whenever you spoke about these kind of bonds issued by the municipalities, these were generally done through private placement, wherein institutions invested and purchased these instruments such as mutual fund companies, pension companies, insurance companies, or banks, etc. And one feature that you need to understand regarding these institutional investors is that they do not take these or purchase this and start trading very quickly in the market. Their intention is invest, purchase and hold these instruments for a longer duration. And because these do not invest or these do not introduce or let's say start trading these instruments in the market, generally one problem with municipal bonds has been that there is no very well developed secondary market for it. What do you mean by secondary market? Where instruments which are already issued are traded in the market. So there was no very well developed secondary market, and if there is no very well developed secondary market, obviously the demand for such instruments will be limited. That's point one. And second point, whenever these types of bonds were issued in the market earlier, and many bonds have been issued. For example, the article itself says between 2019 and 2022, in case of India itself, more than 10.8 billion types of green bonds have been issued. That's one point. And post 1998, 97, 98, more than 6,000 crore worth of municipality bonds have been issued in India. Argument is that these issuances, whichever were done, the value of the bonds was very, very high. The value of the bonds generally was kept at 10 lakh rupees. That is the value of the bond. And because the value of the bond was kept at a very, very high level, retail investors generally did not prefer to invest in these types of instruments. Now, this is where the Indore municipality's green bonds are very, very much relevant. That is point number one. Have a look at the features here. These municipality bonds or municipality green bonds will have a value of 1,000 rupees. Remember this. Will have a value of 1,000 rupees. Each of these bonds will have a value of 1,000 rupee, which means you can purchase these bonds, I can purchase these bonds. In fact, the municipality commissioner stated that 25% of these bonds were reserved for retail investors. So point number one, very, very important, 1,000 rupee was the value of each of these bonds. But whenever these investors subscribed or wanted to purchase these bonds directly in the issuance, the minimum value of purchasing was 10,000 rupees. Don't be confused. Each of these bonds will have a value of 1,000. But can you purchase only one bond directly from the municipality? Obviously no. If you wanted to purchase, you will have to purchase a bulk of 10,000 rupee worth of bonds. Right? That's point number two. Third point, each of these bonds, right? You take one bond, each of these bonds will have four parts. Remember the term here, separately transferable, redeemable principal parts. Separately transferable and redeemable principal parts. STRPP. What is the meaning of it? A bond has been purchased. Let's say this is the municipality bond, and this bond will have four parts. And individually each of these parts you can trade in the market. You can redeem in the market. That is a basic idea of STRPP. And each of these units had different maturities. That is, one bond divided into four parts. Imagine you purchase this one bond. You will have four parts in that. Somebody else will purchase one bond. Again, same four parts are there in the other bond. And these bonds will have four different maturities of 3, 5, 7 and 10 year. And this has actually led to criticism of this bond. That is, the design of the bond is very complicated, which might basically force the investors, retail investors, away from these bonds. But anyways, the credit rating of the bond is AA. Very, very good credit rating. Why? I'll tell you. Generally, whenever you talk about municipality bonds, they have issued the bonds, they have borrowed from the market just like government. Talk about the state government or central government. But one of the important differences between, let's say, the state government bond or central government bond on one side and municipality bonds on the other side is that municipality bonds would end up offering a higher interest rate or a higher coupon rate compared to, let's say, a central government bond. The reason is very simple. Central government or state government bonds generally will have a sovereign guarantee. That is, central government will provide the guarantee to them. Whereas if you talk about municipality bonds, there may or may not be any kind of a sovereign guarantee provided to them. That's one very important point of difference. Second very important difference is these are the municipality projects, and these could be plagued because of cost overruns, delays in terms of implementation, etc., etc. And risk in investing these bonds is generally higher. And that is a precise reason, even though these municipality bonds will have a good credit rating, AA credit rating basically is one notch below AAA. AAA is the highest one. Below AAA you have AA. So despite having the lowest or one notch below the best credit rating, generally these will end up offering a higher coupon rate compared to, let's say, a state government bond or a central government bond. Next, the funds that Indore municipality will raise by issuing this, somewhere around 244 crore rupees, will be used for development of solar projects at Samraj and Ashu Khedi in Madhya Pradesh, one of the districts in Madhya Pradesh. Right, so these are certain very important features associated with the Indore's municipality bonds. Remember these particular features. UPSC can ask you questions on the features of it, or the difference between municipality bond and a central government bond, or the coupon rate that exists between, or let's say the difference in the coupon rate that exists between the central government bond as well as the municipality bond. So these are certain very important points regarding the article which was published in the Business Line newspaper 22nd of February. So if you like the initiatives which we have launched for you, please hit the like button, provide your valuable comments in the section below. And if you're yet to subscribe to BYJU'S Exam Prep IAS, kindly do it right now. Thank you. Have a great day.